Welcome back. You're watching The Money Show on ET Now. It's time for our Spend with TMS segment. And joining me on the show is Manav Singh, the founder and chairman of the Auramah Valley. Manav, thank you so much for joining us today on ET Now. You know, the entire aim of this conversation is to talk about house prices, of course, but also to talk about this whole concept of having a second home. Now, as we know, firstly, home prices have tanked quite significantly across the country, whether they're in metro cities and smaller towns as well. However, the one problematic factor in India is the fact that yields are not that great. For those individuals who may be having some investable surplus, are looking at areas of, investing their investable money in, do you think a second home is a good option?
I certainly do. And, we've also been seeing it, for example, in our place in Auramah Valley in Shimla. We are, we don't do anything like assured returns, but we are seeing the people who have bought with us are getting very, very easily getting a 4 to 5% return on their investment. And if they're active, because they can get onto Airbnb and so many other of these platforms, if they're active, they can get up to 10 to 15% returns, which is what we're seeing. So certainly, yes.
What is the, at this point of time, of course, in cities and in smaller towns, the price is quite disparate, really. I would imagine that in cities, a bulk of the appreciation in realty prices has actually come. But what is the potential you see maybe in the smaller cities, in tier 2, tier 3 towns?
So you're absolutely right. I think the metros especially are significantly overpriced. How is it possible that you can get a home in Delhi at the same price as a home in one of the large cities from the world, like New York or Washington or whatever? So I think the upside is very limited, and it's all got to do with, I guess, demand and supply. But all that is now moving to the tier 2 and tier 3, and we are definitely seeing. I can talk about North India because I'm more familiar with this part of the world. Places like Chandigarh, the prices have gone up by about 20% in the last 3 to 4 months. Places like Shimla, they've gone up by maybe 10 to 15%. And Shimla is probably less because there are not too many developers out there. But I think there's an opportunity for people to make money in the tier 2 and tier 3 places.
Okay, so there is opportunity in tier 2 and tier 3 cities. If you have investable cash, one could do so, invest it in these towns. What about yields then? Because that's the other part of the conversation. Rental yields, especially in a city like Mumbai, even a Bangalore or a Delhi, is very low. That's because your prices are so high. So the rental yield definitely seems extremely low. How would you look at yields? Again, I will ask for in cities, and since your specialty is around North India, in the northern region of the country, in the non-metro regions.
So I think there's a huge opportunity, and it really depends on what price point you come in. So if you come in at a price point which is relevant today, obviously you're going to have much better yields. And I'm saying that you are getting yields of upwards of 5%, and depends on how active you are in the rental market. But obviously, if you come in and all that has been factored in, and if you come in, a year down the line or 2 years down the line, where there's been a capital appreciation of, 10, 15, 20, 30, 40%, then you're already coming at a very high price point. And once you come at that high price point, your rentals remain pretty much the same. But so the yields obviously come down. So I think this is a great time to enter the tier 2 and tier 3 market.
All right. So obviously, a rental yield is essentially your rent divided by the annual rent divided by the property price. So the lower the property price, your yield as well is obviously going to be much better. And that's the reason why an entry point like what we are witnessing right now is a very attractive one. Now, do investments like a second home in the hills, hills is also a great vacation spot where Auramah, of course, as well has properties. Do they tend to generate better yields? I mean, on an average, how do you see, customers essentially, what are the sort of rents they enjoy, and how easy is it, put it up and allow others as well to enjoy the usage of the property, because that as well is a great way to earn a second income.
Yeah, Mubina, so I completely agree with you. So I think if you're looking for a tier 2 place, which is more commercial, more established, like a Chandigarh, you expect a certain rental income, which is going to be lower compared to a vacation area. So, for example, if I'm just giving you an example of Thailand, if you go to a Phuket or a Koh Samui, it's a vacation area. So the rental incomes are going to be higher. So to answer your question, I think places like Shimla or a Mussoorie or a Goa, where there are a lot of vacationers who go, these are the places which are beautiful, serene, great environments, etc. I think these places have a much better opportunity for rental. Obviously, these are short-term rentals, and with all the platforms out there nowadays which allow you to rent your properties, it shouldn't be very difficult, because these platforms are very, very simple to use. And a lot of people are now on these platforms, and they actually prefer to use these platforms and go to a home versus going to a hotel, because, they can completely control the environment of the home. The whole family goes together. Some of them may even take their own staff, their own cook, and control the hygiene and, be able to sanitize the place and really isolate it. So it is much easier, better, and you get a higher return in a tier 3 place, than a tier 2 place. Obviously, the place really matters.
Is it easy, to liquidate an investment like that? Of course, real estate as an asset is obviously not as liquid as, other asset classes. But, in the city, still, I would imagine that it's still easier to, sell your property. Would you say that ease is there to exit a property even in non-metros, in cities and towns like you're mentioning?
So, if you had asked me this question a year ago or before the pandemic, I would have said, no, it's not that easy. It is definitely harder, because this is not a priority segment for most investors or even final users. It's first home is a priority, second, third home is not a priority. So everybody, the decision is taken, it takes a longer time and so on and so forth. But where we are today, I think there's going to be a huge shift from tier 1 cities where it's almost unlivable. I have yet to come across one person who will tell you Delhi is a great place. Everybody says, we want to get out and we are stuck out here and so on and so forth. But, and where are they going? They're going to tier 2 and tier 3 cities, where they will have a much better standard of living than living in a place like Delhi. So going forward, I think it is going to be much easier. It's going to be an easier sale than it was a year ago. And I think this whole pandemic has changed the entire game has got changed, with this whole pandemic coming out and the work from home and with technology being offered and people accepting that you can do a Zoom call or a video call. So coming back to answer your question simply, yes. You will be able to sell it much easier than you could a year ago.
Great. Manav, many thanks for joining us today on ET Now and, explaining this entire concept of owning a second home in the current market to all of our viewers, and of course an opportunity as well that's presented to all our viewers to earn a second income. The importance of that, of course, has been felt by all of us during this pandemic as well.
Thank you very much for having me.
Okay, well, with that we are out of time. We're out of time, so we'll wrap it up on The Money Show. Many thanks for watching. Stay tuned to ET Now. We have Startup Central coming up next.